Hello and welcome to Moneylife. This is Sucheta Dalal. We're going to discuss the National Stock Exchange once again. Why are we discussing it? Because the more things change, the more they remain the same. And the way it works at the end of the day is, as far as the NSE is concerned, heads it wins and tails investors lose. Now, what do I mean by that? All of you who invest in the markets know that we have strict corporate governance rules, mandatory disclosures, whole lot of red tape, and yet this has not stopped the management of listed companies, public-private partnership, even first-line regulators like the NSE from doing exactly as they please. Independence of boards is a sham. The directors are usually eager to please management. They ignore whistleblowers as long as the sitting fees that they earn and the perks are very good. It feels great to be in a first-line regulator like the National Stock Exchange, right? But it doesn't matter whether these directors, luminaries are former bureaucrats or bank chairmen, judges, regulators, even heads of industry. Their interest is always aligned with top management in all professionally managed companies. We've seen it happening with infrastructure leasing and financial services. We've seen it happening with the National Stock Exchange. All the checks and balances fail to prevent something going wrong. And the worst thing is that the details just stumble into the public domain, not because there are disclosures mandated by the regulator, but only when it's too late in the form of charge sheets, forensic audits, and show cause notices. By that time, investors have lost the money, and all that you have is academic interest. We knew something was wrong, and there it is. Or sometimes when people like us have broken a story. So, public-private partnerships like IL&FS and National Stock Exchange were actually structured as private companies. And since the board abdicated responsibility, they were run like personal fiefs of those who were in charge. None of the checks worked. Investigations into mega scams in India do not even lead to systemic change. So we had the Colocation Scam, which we exposed in 2015. A lot of it is tumbling out today. The CBI has filed a case, but have there been serious changes on the ground is what we're going to discuss in this column. In fact, what I find is that wrongdoers are able to game both the media as well as the judicial system, and the verdicts come decades later. Only the expense and humiliation involved in the whole process that drags on is the punishment. So you're not waiting for justice. You're not going to wait for return of money. Those who are indicted, sometimes even wrongly, to them the process is the punishment. We are seeing this being played out in the NSE with aggressive posturing by Sucheta Dalal's defense team in her appeal before the Securities Appellate Tribunal, and in another case that was heard recently in Hyderabad. Let's look at some quick facts in a sequence. Now, first, the NSE Colocation Scam. NSE, as you know, is the largest derivatives exchange in the world in terms of orders. It's a first-line regulator. It's a systemically important institution. Yet, it functioned like a mom-and-pop shop for nearly 20 years, and its boards and a captured regulator did nothing. Ms. Ravinarayankrishna was delegated, or actually she and her predecessor Ravinarayan were delegated sweeping powers. She could appoint who she wanted. She did that with Anand Subramaniam, gave him repeated promotions, bypassed the appointments and remuneration committee, and took in a person, made him group operating officer when he was completely unqualified for the job. As the second senior most person in NSE, he was not even listed as key management person, which is required by the regulator, and there are lots of rules about who these people are. We've documented all this in our book, Absolute Power. So I'm not going to go into those details. But we're really concerned with what happened on 11th February. NSE's absolutely absurd violation of rules was finally admitted by the regulator in a fairly weak order on 11th February 2022. This order made waves around the world because of the astounding claim by the former managing director, Sucheta Dalal, that she had sought help from a Himalayan yogi who communicated with her on a very earthly email called rigyajur@outlook.com. As absurd as this is, it made the exchange the laughing stock, got the government to start acting. The CBI cranked up its investigation, it's filed a charge sheet. Sebi also geared up, and a whole lot of people who had never questioned have got questioned again. Problem is the order itself. This order by a whole-time member who was part of the legal department, has been with Sebi for 30 years, is so weak, flawed and full of loopholes. He even let off a senior executive who was part of the dubious dealings in appointing Anand Subramanian. He himself was rewarded, so one assumes that that was a quid pro quo. Now, in the appellate tribunal, obviously, Sucheta Dalal team has been using this flawed, weak order, ripping it apart, picking holes and mistakes, and we don't know what's going to happen. In an uncertain judicial system, only time will tell whether she gets off on technicalities and they override the egregious wrongdoing, or what happens when it goes to the Supreme Court. Now, even today, the Securities and Exchange Board of India has refused to investigate which set of people on the board of directors handed over such sweeping powers, not just to her, but also her predecessor Ravinarayan. This allowed them, it is this that was the turning point, which allowed them to run the exchange like a private fief and report whatever they wanted to the board. Yet, they managed to deflect all responsibility for the colocation scam down the line to heads of departments and others. They even washed their hands of responsibility for framing guidelines as required by Sebi for fair and equal access to the colocation facilities. By now, most of you know, colocation is when large investors place their servers within the exchange so that their trades hit the main exchange server the fastest, and they use algorithm-based trading so that millions of orders are put through in nanoseconds. During Sebi's cross-examination of Chitra in April 2018, she systematically passed the buck, and she did that all over again, my sources tell me, when she was interrogated by the Central Bureau of Investigation. Even when she was confronted with her colleagues, she said, "I don't know," and asked somebody else. Now, you wonder, why is it that senior management gets such hefty salaries for framing policy, for implementing it, for making sure the exchange runs the way it should? And if they don't do it, isn't it a fraud on the exchange and the people? Now, this has happened in the past. It's a matter of worry. It's a part of charge sheets and it's being heard. My point is that it's happening all over again. So, Vikram Limay, the current managing director, has taken a similar stand in court in a matter pertaining to Anugrah Stock and Broking Private Limited. This is a company where investors lost over 1,200 crore in 2020. It was a brokerage firm that was declared defaulter just almost soon after the lockdowns began. There was a criminal case filed in Hyderabad. The matter was heard. It was CRPL 180 of 2022. The judgment has been reserved, so we don't know how the court will rule. But the point is that Anugrah was just one or among the first in a row of 31 broker defaults that have happened in under 3 years of Mr. Limay's tenure. He in fact completes his 5-year tenure in July-August, and he does not want to be reappointed. Now, Mr. Limay came in with the mandate to clean up the mess left behind by his predecessors after the colocation scam. But 31 broker defaults in which people have lost money ought to require a separate investigation. You've had individual show cause notices, but there is no broader inquiry into why this is happening repeatedly. The chief risk officer is someone called Priya Subaraman. Both of them have been the notices in the Hyderabad criminal matter that I referred to earlier. Moneylife, as many of you know, has broken the Anugrah debacle story, and we have covered it extensively. It's available on our website, moneylife.in. We pointed out that it ran like a Ponzi operation, promising high returns. People fell for it and lost money. NSE now blames investors and said, "Bad luck, you didn't check enough." I'm going to show you now that NSE itself did not check enough, did not do what it should, did not fulfill its mandate. So first, the rules. Sebi guidelines on enhanced supervision of stockbrokers, framed in 2016, make the exchange responsible, among other things, for monitoring use of client funds, pledge of shares, transfer of client securities, monitoring their financial strength. It has separate rules of 2018 under prevention of unauthorized trading by stockbrokers, which also provides for early warning alerts, rules on handling client securities, funds, etc. All this is already too late for Anugrah investors since the firm went belly up in 2020. But there were rules. Sebi was supposed to follow them 2016, 2018. Now, it's possible that Mr. Limaya and Ms. Subbaraman, Chief Risk Officer, could say, well, things began to go wrong in Anugrah way before our time. And that is what I'm going to show. So NSE did not do its job. In fact, it goes back to 2013. In fact, ironically, when Sucheta Dalal was still there, things were repeatedly covered up by the previous management with tiny penalties. So 2013-14, there was an annual inspection. They found wrongdoing after the inspection, serious violations like non-settlement of client funds, operating out of unapproved terminals, funding client operations. What did NSE do? Tiny fine of 1.59 lakhs. Meanwhile, Anugrah's operations exploded. Its turnover increased by 2,546%. The next year, 2014-15, there was another inspection. Again, wrongdoing. NSE imposed a penalty of 82,500. Similar violations mentioned above. Unperturbed, it allows the turnover to increase without worrying. 2015-16, another inspection, more wrongdoing, a penalty of 75,000 for non-settlement of client accounts, similar stuff as before. Now, does it mean that these penalties are meaningless and every inspection finds wrongdoing and that's why NSE is not bothered? It doesn't stop here. Now we are coming towards a time when it went bust. So 17-18, NSE's penalty increased to 1.93 crore. The violations included misuse of client funds, acting as principal, giving loans to certain entities, not small amounts, 304 crores, and loans to directors, 1.65 crore. Inspections also revealed a shortfall of funds of 430 crore. And worse, that the broker was reporting incorrect data. Its ledgers and margin payments were all wrong. Sebi is not looking at it. NSE is now pushing it all on investors when it should have looked at it. This is before it went belly up, remember? From 7th August 2019 to July 2020, the CDSL, which is Central Depository Services, a depository, also generated several alerts which should have woken up the NSE management. It did not. Anugrah's clients obviously remained clueless because how are they supposed to know about the violations? More importantly, the turnover was rising rapidly, like I said before. Instead of NSE waking up and wondering why is it reporting such high turnover and doing so well, what you have is, at that time, NSE issued a letter of appreciation, congratulations. In fact, in April 2014, NSE's Chief Business Development Officer sent a letter to Paresh Karya, who's founder of Anugrah, saying, it has been quite heartening to note the significant contribution made by your team to the growth of volumes in Bank Nifty operations. The market grew 33.8% compared to last month, whereas your volumes grew 2,546% in Bank Nifty. We commend you and your teams for making this happen. I mean, how astonishing is it? Why didn't it raise red flags? Because that sentence shows that NSE's single-minded, singular focus was on increasing trading volumes. More and more trading volumes means more valuation of the exchange, more pay and perks for senior management because everything was tied to it, and a captive board was anyway ready to endorse anything that they said. Every public statement of Vikram Limay, like his predecessors, harps on about NSE's turnover and profitability. Never any mention of these astonishing 31 broker defaults in his watch. In fact, just 3 years of his watch. Because it's so easy to blame investors, and disaggregated investors find it so difficult to fight a mega exchange like this with deep, deep pockets. In fact, broker defaults have been so numerous that NSE's Investor Protection Fund, in fact, finds ways to deny compensation. SEBI does not even ask about it. SEBI had to be goaded and pushed into increasing or pushing the exchange to increase the size of the investor protection fund. We have told you about it in one of our earlier blogs. The bigger irony is that even today, Vikram Limay and Priya Subramanian, the chief risk officer, used the same defense that I would call the Ravinarayankrishna defense in court. Both of them have similarly claimed, we don't look at day-to-day operations or broker issues. We have heads of the department and officials to look at routine day-to-day matters. Yes, very well, you're involved in policy making. We understand that. It's not the job of the MD. But when something goes wrong in the routine, doesn't it get escalated? So when year after year after year you're penalizing an exchange, at what stage will it become the problem of the chief risk officer and the managing director? If NSE top management was not involved, this is another point. If they were not involved in routine matters and broker issues, then why were they part of a meeting between Paresh Karya and the head of Teji Mandi, which was a strange sub-brokerage doing the same Ponzi work? There is a recording of this meeting. I know it's verified and accurate. It was presented in court. And both these senior people were present. So now make up your mind. Either you're not looking at day-to-day operations or you're in charge. We don't know what the court is going to decide, but investors, in fact, 2 crore investors have come into the market since the pandemic, doubling India's investor population. They need to be really worried if heads of regulatory bodies are able to deflect things, get away scot-free and saying, not my job, the juniors did it. In any other jurisdiction, 31 broker defaults, in fact, even in 92, when there were such defaults in the BSE, it led to outrage, investigation, or overall of management. This time, there's silence and the buck stops at SEBI. The regulator has even failed to compensate investors for another problem that happened on 24th February 2021 when there was a huge trading glitch. So there is action against NSE. NSE defied all standard operating procedures, abruptly started the exchange after trading positions had been squared off by all the large brokers. And there were huge losses suffered by investors for no fault of theirs. And they were not compensated. There was no way that trading should have started that day under NSE and SEBI dictated SOPs. Who pays the price for it? Now, investors who have already lost money hardly have the stomach or the resources for a legal battle. In conclusion, I can say we will continue to muddle around from one scam and one problem to another. Small investors will watch helplessly and accept losses only because they don't have the resources to fight, while senior management, using unlimited organizational resources, will put together the legal firepower to nitpick, find loopholes, deflect responsibility and accountability, and this will continue. Over time, it can only erode investor confidence in the system. Finance Minister and the SEBI head need to worry about it. You and I who invest in the market also need to worry about it and make a noise. If you agree, please share this video. Thank you.